The end of the great Keynesian experiment is just simply a mathematical problem, right? We added $1 trillion in new debt in 106 days. Went from 36 trillion to 37 trillion in 106 days. A lot of that's just compounding interest in math. The election of Trump, some of the revolutionary ideas he has, like this DOGE committee, to make some recommendations for cutting waste and, all these different things. That's encouraging. I'm all for it. I mean, I don't want anybody to get me wrong. And I don't want to seem cynical.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to and watching the Financial Survival Network. I'm your host, Kerry Lutz. Our good friend Craig Hemke is with us now, tfmetalsreport.com. Make sure you go sign up there now, get his free newsletter. You got a question for Craig, myself, kl@kerrylutz.com is the place to send it to. Craig, so are we going through an American revival? Are all sins going to be forgiven now that the election is over? And I don't know, maybe I wouldn't necessarily say the grown-ups are back in charge, but maybe the more developed adolescents are running things than the prepubescent, kids that, I don't know what I'm saying here. But
Get off budget. I tell you, things were really, not that they're not crazy, but boy, you just think of it, a lot of things changed in the last 4 years. For our concerns about the precious metals, I remember when I got my start at Zero Hedge writing in the comment section, people had like a tagline, where you could write so that every one of your comments ended with a tagline. And I don't know why, but I added a tagline. It was like 2009. And I said, the end of the great Keynesian experiment is upon us. Prepare accordingly. And now, it's like the name Terry Ferguson. I just kind of got stuck with it. And I got stuck with that tagline 15 years ago. The end of the great Keynesian experiment is just simply a mathematical problem, right? We added $1 trillion in new debt in 106 days. Went from 36 trillion to 37 trillion in 106 days. A lot of that's just compounding interest in math. The election of Trump, some of the revolutionary ideas he has, like this DOGE committee, to make some recommendations for cutting waste and, all these different things. That's encouraging. I'm all for it. I mean, I don't want anybody to get me wrong. And I don't want to seem cynical, but old men like myself, and probably you too, Kerry, we can't help. But I always say there's a pretty fine line between cynicism and realism, right? Mm-hmm. So am I cynical to be doubtful, or am I just being realistic that this train is too far down the tracks to reverse it? If the government were to actually try to cut spending from, the 1.8 trillion deficit to a 0.8 trillion deficit, that reduction in liquidity would be significant. What would that do to markets? How much of the GDP growth that is trumpeted at 3%, when you do the math nominally and adjust it to dollars, it equates almost exactly to that $1.8 trillion in government spending. How many of the new jobs are government employees? So I don't know if it's feasible that, the train can be slowed to any great extent. And I'm worried that if they try, what's that going to do to markets? Does that do to the economy? What does it do to tax revenue? Could net the reduction of deficit that falls through the spending reduction be offset by a reduction of tax revenues that would come in by the slowing of the economy? So anyway, societally, culturally, all that kind of stuff, man, if we can get the boys off the girls, sports teams, great. But I don't know if economically how much impact.
got me laughing. Hey, even if we can't get them off the sports teams, if we could just keep them the hell out of the bathroom, right?
Right. This is, look, I'm all for, a level playing field. You now be mixing my metaphors and all that stuff, but man, I tell you, as a father of two daughters, all of the efforts that were made over the last 50 years to try to create opportunities for women to excel in sports, Title IX, all this kind of stuff. I mean, it's great. And then anyway, I'm getting off on a tangent here. There are things that can be impacted rather directly by, a new White House, a new administration. I don't know. I guess I'm optimistic. It remains to be seen what kind of economic and monetary and fiscal policy impact can be had. I think what happened in the immediate aftermath to the election was almost kind of a mania, that all this stuff was certain to happen and was certain to happen quickly. We'll just see how it plays out next year.
Yeah, it can make a difference. But, when we go back to the milkshake effect, Duncan's theory, and all of this growth and everything that happens is because of credit. So you cut back on the amount of credit that the government's taking in and the amount of money that they're printing. And, it's got to lead to a crash. There's no other way. Get rid of 1 million government employees, even though I think government employee is an oxymoron, government worker, I just don't see any way out of it. And yeah, I think it's easily $2 trillion a year worth of waste baked into the system, right? But, really, like, I think you're right. I mean, we're too far down the rabbit hole here, right?
Yeah. Well, and that's just it. Can the math actually be, and like you said, liquidity, banks that are holding all these alleged assets on their balance sheet that are underwater because of the moving interest rates, right? The Federal Reserve and their balance sheet and the unrealized losses that they have. And so this notion that, again, Trump is going to, it was a number of factors that all kind of came together that drove gold down 10%, from which it's now recovering as we expected. But there are a number of factors, that Trump was going to promote economic growth, which was going to lead to inflation, which meant you should sell your bonds and rates are going up. And if rates are going up, that meant the dollar was going to go up. And then I'm all for Bitcoin, but, Trump was going to promote Bitcoin. So get out of gold and get into Bitcoin. And all of these factors combined for that pretty sharp sell-off in gold. But now I think that the mania, again, I keep using that term, this kind of hysteria that, this is all going to happen overnight, has kind of worn off and the metals have found their footing. This is a rather always very strong seasonal period. Doesn't mean we have to go up every December and January, but on average, December and January are the third and second best months of the year for the precious metals. So I think we're seeing now, again, with this latest news out of China as well, a pretty solid rebound for the precious metals. It's going to get a little Santa Claus rally and extend into January.
Yeah. So the honeymoon eventually sounds like it's going to end. Where are we going to be at then?
Well, yeah, you wonder. This is not dissimilar to what happened in 2016. You remember election night 2016, all of a sudden gold just was up like $100 or whatever, $80 when you went to bed, and you woke up the next morning, it was down $80.
Yep.
And then it sold off into the end of the year as the dollar rallied, because, Trump was going to be protectionist and tariffs and all this, and this perception that strong dollar. Well, in fact, he was a weak dollar president. He actually wants a weaker dollar to promote U.S. products and trade. And once that kind of solid rationale took hold in 2017, the dollar fell and the precious metals rallied for about the next 8 or 9 months. So we'll see if something similar doesn't play out next year.
Mm-hmm. All right. So gold today, we're up pretty smartly. Mm-hmm. Silver is up over $1. What of silver here? What's going on here?
Well, this is probably the most interesting story to me at this point. On the chart, silver has kind of a classic double bottom where you see this as a classic double top. You come down to a spike low, you get a bounce, and then you get kind of a rounded low at the same level. A lot of classic double top is that way. You get this blow off top, you get a pullback, and then you go up and you round over trying to make a new high, and then that's it. You can see that on the chart. You can also see that in this series of this long-term uptrend, silver's been in since March, really. At the conclusion of the most recent pullback in July, silver came within a whisker of its 200-day moving average, kind of bounced off of it for about 4 days. Silver came down within 10 cents of its 200-day moving average back the night before Thanksgiving, that Wednesday night, 2 weeks ago. I got to 30.09, something like that. Now it's pushing 33 today. So a lot of things on the chart that looks good. What I want to watch for, Kerry, and I think this will be the most significant thing as we head into this month and then as 2025 begins. People will recall, we're all frustrated, as silver owners because, price got to $50 in 1979, whatever, round up. Got to $50 round up in 2011. And those are great years intra-year. But both of those years finished at about 31 and a quarter. So if you pull up an annual chart, not a daily chart or a weekly chart, a chart just of, a candlestick chart of every year of silver going back the last 50 years. You see these big green candles, but both of them finish at 31.20 on the spot market. We're right now about 33. We get an annual chart breakout at the end of this year. That could be something that really drives a solid institutional high net worth, family office, whatever bid for silver next year. Do you remember, Kerry? Who was that guy from Guggenheim? Scott? What was his name? Scott Menard. Remember this from a couple of years ago? Dude was at Davos and he's sitting there and he's on a CNBC or Bloomberg panel or something. He goes, I think silver about $18. He says, I think silver is the investment of the year. And they were all like, what are you talking about? Because nobody owns it. I mean, you and I own it. People watching this own it. But I mean, nobody owns it, and no institution or hedge fund, nobody owns it in size. What gets their attention? A breakout on an annual chart where you see, wow, what's going on here? So for everybody watching this, we got 3 weeks to go to the end of the year. Watch that 31.25 or so in silver. If we can extend a little Santa Claus rally, that might be a little foreshadowing of what might be to come next year.
Well, we hit 35, right?
Yep.
And bounce back, which you expect, right?
Yeah.
And gold was kind of like hanging out and kind of retracing a bit. Now it's kind of freeing up. I guess until silver leads gold, we just don't know, huh?
Well, it kind of is a little bit.
A little bit.
The mining shares have been interesting as well lately for the obvious reason. I mean, they got this washed back in November. The big primary drivers of the mining sector, even Stanley Druckenmiller, Kerry, you think, is obviously about 1 million times smarter than I am. But when he wants to own precious metals, he buys a GDX and he buys Newmont, which is like the two stupidest things you could possibly buy. This brilliant guy, but he just, reflects, well, I don't know anything about gold, so we'll buy Newmont. So Newmont and Barrick are always the worst performing mining companies because they have the same share price they had 20 years ago because they can't control their costs. So when they release earnings, as Newmont did in late October, it just crushed the sector, just killed it.
Yeah.
And a week later, here comes Barrick with the same problem to wipe this out. So anyway, the mining sector pulls back, but now the mining, smarter mining investors are going, oh, wait a second. The price of gold is still $2,650, $2,700. I bet the fourth quarter is going to look pretty good too, just like the third quarter. The mining shares are recovering. They're being accumulated. A lot of green candles on the daily chart, which means price rallying through the New York Stock Exchange session. GDX rallying up, getting back above its 50-day moving average. Silver's back above its 50-day moving average as we speak. It might be kind of leading gold a little bit here. Again, seasonally, Kerry, this is a good time of year.
Yeah.
After we get through the tax law selling season, particularly in Canada, that usually wraps her up around the 16th, 17th, 18th of December. This should be a good time of year. We should do a year-end rally, and we could extend that rally with some positive sentiment into January.
All right. Well, from your mouth, I guess.
Right.
But we do know seasonally, this is always, middle to end of Q4 to middle to end of Q1. that's a good time. But, the stock market has stayed strong throughout all this. There's like it's just complacency is ruling. And until it does, right?
Well, and liquidity too. We might be getting into some spots where it's a shortage of liquidity, like that reverse repo balance that was at $2.5 trillion is now down to $150 billion. But the important news is, why is gold and silver up here on Monday the 9th? A big change of monetary and fiscal policy out of China last night. First public change since 2011, signaling that for at least the next year, they're going to be very loose and accommodated and providing liquidity and trying to keep liquidity flowing out of China. Well, there you go. There's just more global fiat to help drive everything.
It's coming here too, right? U.S.
What's that, Kerry?
It's already baked in the cake in the U.S., right?
Well, exactly. I mean, the Fed is talking, they're going to cut rates again here next month, or next week, I should say. We'll see how much they actually then expect to cut next year, but they're being easy. And Kerry, in the end, that's where this all has to lead. I mean, Trump's a real estate guy. He exists on debt. He knows lower interest rates are better than higher interest rates, right? So you can still see this path of global loosening, to try to just keep the gears of liquidity greased. And that it's a kind of a stretch, or maybe, I don't know, to say that, rising tide lifts all boats here. But until we get into some real sharp liquidity squeeze and reduction of global liquidity, it's hard not to see where things like the stock market don't keep going up.
Yeah. Yeah. I mean, it really, we haven't had any, we made it through September and October without any wildness, right? Any crashes. And you'd think this year of all years, with the uncertainty of the presidential election, all this stuff going on, if it was ever going to crash, it would be this year. And yet it didn't.
Yeah. Yeah. Right. Yeah. And, and there's some history. The first year of a presidential cycle typically is a little challenging, but that's not universally true, but it can be. And again, you almost need a signaling event that would kind of cause some of these dominoes to start tumbling into each other. Some kind of real crash in the U.S. bond market that gets rates, the 10-year note back up over 5% or something and moving higher. Again, what's going to cause that? In fact, even, the last 2 weeks, the yield on the 10-year note's down 25 basis points. Bond market's rallying. So again, hey, look, I predicted about 10 of the last 1 stock market crashes. Things just keep going up, and maybe, Kerry, in the end, it just augurs that toward that old Austrian economics idea of the crack up boom, that toward the end, all these central banks are just creating so much cash trying to service their debt that it just leaks out into everything. And maybe that's all part of what continues.
Perhaps. And I mean, here, even over the weekend, we had the collapse of the Syrian regime, right? Mm-hmm. The end of the 50-year peace treaty between Syria and Israel, right? We've got, and we don't even know who the heck is going to go in there and run the show. And maybe that's why gold's going up. I hate to try to attach daily news events to gold, other than when something really bad happens and it shoots up $100 an ounce, then But the normal day-to-day fluctuations, it's like trying to say why the stock market went up.
Right.
Why went it down today? It's pointless.
Right.
But here...
And it is, today's rally a lot with China. We got smashed for $50 in gold back in June when China announced they were stopping for a little while. So then back on Saturday morning, they announced that they were going to 6 new metric tons that they're acquiring. So part of it's that. A lot of today's rally is this policy stance, formal policy stance. It's been announced by the PBOC. All commodities are higher. Copper's up a couple percent. I mean, my entire commodity board on my screen is green. So all those are pretty positive fundamental factors that are pushing us up today. Well, again, the geopolitical stuff is going to continue to be first and foremost on everybody's mind, as until Trump gets elected, probably. But even after that, then we're still going to have troubles everywhere. Middle East and Eastern Europe and the rest. Gold continues to be viewed as a safe haven, no matter what the Bitcoin maximalists want to spin it. I have no problem owning both. I've owned both. I bought Bitcoin at $600 about 8 years ago. I wish I'd bought more. I wish I'd bought it at $6. But nonetheless, I think they both, why it has to always be presented as one or the other, I don't understand. But nonetheless, whatever. I think there's bright future ahead for both. And 2025 should continue the trends we've seen this year.
And yeah, we'd be remiss if we didn't mention the fact that Bitcoin broke 100K.
Right.
I don't know what it's selling at this particular moment.
98, 97, something like that.
Yeah, it's pretty close to 100K. I think it continues to go up. I think 150, 135 to 150 is kind of what I'm expecting, once it breaks out of whatever it's in now. But it's obvious that it's got a lot more to go here,
Yeah. Well, we started this talking about math. You can talk about math there too. What 19 million Bitcoin or whatever it is have been mined, but the most they're ever going to mine is 21 million. I don't know. I'm not a big Bitcoin person. I don't know what the exact numbers are. But once I figured that out in 2016, I went, wait a second. This is just supply and demand. If supply is fixed and then dwindling, the future supply, while demand is increasing over time, well, how does this not work?
Yeah.
And so I was fortunate. I figured that out when I did. But again, that's the thing. I don't see them as opposite ideas. I mean, they're both just alternatives. Get your money out of fiat.
Yeah.
As that continues to be devalued versus everything, and move it into something else. And they both provide that role.
Yeah. Yeah. And look, I think if the governments of the world really wanted to shut it down, or the U.S. government wanted to shut it down, it would have been gone already. We can speculate as to why, but they could block every Bitcoin node and you would never be able to find out again what price it would be selling for. And that would be the end. Because because Bitcoin's all about price discovery, right? You instantly can find out what it's worth any moment of the day. Whether that price is true or not, we could debate that, but at least you can find out the theoretical price of it. And where you not be able to do that, that would kill it for good. But now Trump is pro crypto. We didn't even talk about he appointed a czar in charge of AI and crypto.
Mm-hmm.
That's pretty wild. Who would think?
Yeah, and it's forward looking, and that's where we need to be in 2024. That's for sure.
And yet he's adamant about not allowing a CBDC, right?
Let's hope so. Those are the kind of things that keep me up at night. That there has been this war on physical cash for about as long as I've had my website. And that is something, that's a war we have to win.
Remember, I wrote an article many years ago called Operation Dirty Money, where they weren't even replacing the worn bills in circulation during Obama's time. And my friend who had a ATM business in hotels in Florida here actually sold the business because he was getting jam ups all the time and he'd be away and his wife would have to go to the ATM with 30, 40K in cash. She didn't want to do it. And, they could not get clean bills. Now that problem, for whatever reason, remedied itself. I have no idea why it happened. And I have no idea why it was solved, other than the fact that they don't want you carrying cash.
Yeah. And physical metal fits in that category too. We've talked about this multiple times over the years. I reckon you need to understand if your net worth and financial well-being can be reduced to nothing but a string of zeros and ones, it can be canceled and taken from you in a keystroke. So, when they sit there and say, you don't need cash, and really the only people that use cash or Bitcoin is illicit, things like bookies and drug dealers and money laundering and stuff like that. That's their excuse for trying to take, actual alternatives out of your hands. Don't let them. And that's the most long-term, that's the most important war we got to fight.
It's so true, man. I went to Europe like a couple weeks ago to visit my son. And, I carried X amount of cash. I don't like to say how much cash I carried, but more than I usually would. And Craig, it's the first time I ever went overseas and never changed money, because it's like you just use your card. You don't even use your card. You use your iPhone and you just scan it. And, it didn't matter where it was. Now, you go to Thailand, they're 20, 30 years behind. You have to use cash. Germany, big on cash, certain societies. But I was in Sweden and Denmark, no cash to be seen in those countries. And
that idea.
So they've basically gotten, for convenience, they've gotten everybody to give it up, right?
Yep. And again, there's a reason why it was written in the U.S. Constitution that gold and silver are money, because that is still part of your personal freedom. Now, this is something that, again, I keep referring to it as a battle and a fight, but it is. And the more people that understand that, the better chance we have of winning.
Totally agree with you, man. I think we'll leave it at that. Make sure you go over to tfmetalsreport.com for a little more than the price of a latte. You can subscribe. Even if you don't subscribe, you'll get the regular newsletters, but the forum is really worth it because, Craig, you have some of the brightest subscribers of any site I've ever seen.
Thank you. Yeah, I was just looking through the weekend thread of comments on my Friday podcast, the stuff that there's even a couple of people on there say, how do you people talking about me, talking about the other members of the site? How do you people have time to find all this information? That's really important. And especially, at a time like this, you need as much information as you can get, man.
Yes.
If this election and everything in the run up to it taught you anything, you need to be out there thinking for yourself. You just can't be swallowing what the mainstream media or the mainstream financial media try to tell you. You got to be thinking for yourself. You're going to be left holding the bag.
Could not agree with you more. Hey, if you've got a question for Craig, myself, email kl@kerrylutz.com. Link to Craig's site is in the show notes of this interview on financialsurvivalnetwork.com. And make sure you sign up for your free newsletter. We've got over 60,000 people subscribed now. You can believe it at this point, going from literally zero, but over 14 years, people get the word out. And Craig, we'll talk to you again soon. Happy, healthy, Merry Christmas. Talk to you after the first.
Right back at you, my friend. All the best.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.